A rally in the banking, investment and insurance counters has been the key driver in the boom at the Nairobi Securities Exchange, which has seen the 20-share index jump past the 5,000 mark for the first time since January. Now, this has allowed investors to reap from the big increases in share price. But a slowdown in the commercial and services segment and the emergency of segment that is dragging the bus. Here's KTN's Adelaide Chongola with the rest of that report.
After an 8-month wait, the Nairobi Securities Exchange finally broke the 5,000 psychological mark as the ongoing rally lifted the 20-share index.
The all-share index is up about 13%, whereas the NSE 20 is around about 2.6%.
Amongst the biggest drivers of the rally were the banking and insurance counters, which registered an average gain of 20% over the period. Equity Bank saw its share price jump 49.2% from 31 shillings in January to 46 shillings and 45 cents, while CFC Stanbic share price gained 48.8% to trade at 128 shillings, up from 86 in January. Housing Finance was trading at 44 shillings and 75 cents, 46.7% higher than January's price, while KCB was up 34.1% over the period. At the same time, insurance firms Pan-Africa, Britam and CAC Insurance gained 42, 34 and 30% respectively as their diversification efforts increased their attractiveness to investors.
The return on equity in the banking sector is pretty good in Kenya, and I think that's really what's driving investors in there.
But the rally has not diffused to all counters, with some having shared critical numbers over the 8 months. Amongst these are Kenya Airways, whose share price lost 14%, and TPS East Africa, which manages the Serena chain of hotels, which has shed 20% of its share owing to the recent spate of terrorism attacks that have crippled the tourism sector.